Hi everyone, this is Pete here. So today we're going to do a part 2 update on the Elon Musk Twitter trade. Can we get more free money from Elon Musk? Let's go straight into it. So let's quickly recap. If you have not watched the previous video, it is over here. But what can potentially happen to the Elon Musk Twitter trade right now? So previously I mentioned that there could be a 80% chance that Elon will buy Twitter. As you can see over here, I don't think he will go higher than that because that was the original offer that he has, and nobody likes to pay more than what they need to. And the next thing is, I don't think the court will ask him to pay even more than that because that would be against the rules of the game, so to speak. Now, therefore, I think the price will not go beyond 54.2 before 28th of October, which is what Elon Musk has been given the time to close the deal. Now, the next scenario that could potentially happen, which I gave a 20% probability, is that Elon Musk gets out of the deal, that he does not have to buy Twitter, right? So Twitter will fall back to its previous prices, and I believe that will be around $43 and might be even lower to $40. But I really don't think that this outcome will happen anytime soon before 28th of October because Elon Musk already told the judge that he will try to close the deal before 28th of October. So any kind of fallout will likely only happen after 28th of October. So this is the previous one. Right now, after listening to more legal opinions and listen to various podcasts, I've come to another updated probability, and it is this, right? That I think right now the chances of scenario 1 happening, which is Elon Musk buying Twitter, is as high as 90%. Okay, and the chance of him getting out of it is 10%. So based on the legal opinion of many lawyers out there, is that there are very little wiggle room for Elon Musk to get out of this deal. So if you want to understand it very deeply, I will attach a YouTube video over here that you can watch, that a lawyer go in depth into why he thinks that Elon Musk will not be able to get out of this deal. So in terms of our previous scenario, what we did was that since we know that Elon Musk is unlikely to pay more than 54.2, right? So one way is to look at how can we sell a call option at $55. Okay, and the second scenario, if the deal fails, it will probably fall back to about $40 and $43. So therefore, you can also look at selling put option at $40. Now this was about a week ago. Let's have a look at what actually happened to those trades that I personally entered. So over here you can see I've entered a few trades over here, 2 sell put trades for Twitter, right? And previously when I sold the put option, it was about $1.88 and 84 cents for different strike prices. And you can see right now the premium has decayed to 41 cents and even 21 cents. Now, with just 4 days left to expiration, I fully expect these options to totally be worthless by the end of it. Therefore, I can pocket the full premium in this case, right? So I'll do an update video again when this happened. Now, not just the sell put, but actually the sell call trade has already taken place, right? I deliberately do this so that I can do a video to show you guys what will happen when you do a sell call, or in fact, when you sell any options and it expires. So over here, you can see that Twitter, I sold a call option for strike price 55 that will expire on the 14th of October. And over here, you can see that it says it has already expired, right? And the price is 0. So I have fully pocketed this premium over here. So some of you are asking, Pete, other than selling options, how about buying options? Is there a way to benefit from this trade in terms of buying options? So today, what I'm going to go through is buying an option to benefit from this trade. But before that, a word from our sponsors. Now, before we discuss the trade, do you know that there's a new brokerage in town? So if you're trading stocks and options right now, there's a new brokerage called Usmart where you can trade straight options and covered calls. Now, in terms of fee, Usmart right now is offering 0 commission for US, Hong Kong, and SG stocks, and there is no minimum charge for Singapore stocks. They also offer fractional shares, so investors with low capital can invest in pricier US stocks like Tesla and Google with as little as $100. And they also have additional features such as smart orders and daily stock pick created by their in-house Usmart market strategies to make your investment a breeze. Now, and most importantly, Usmart right now is having a welcome reward where you can receive monthly cash stock vouchers worth up to $400. Terms and conditions will apply. So find out more details and register your account in the link down below. So the latest price for Twitter right now is $50.45, and as we know, the purchase price for Elon Musk is $54.20. So other than selling options, if you want to buy option, a potential trade that you can look at is actually buying a call option at the current price, which is $50. Now, in short, what does buying a call option mean? It means that I am buying the right, okay, to buy Twitter shares at this specific price, which is $50 in this case. So as you can see from the Usmart platform over here, right now, the Twitter call option at $50 is going at $2.75, and I brought it up here for your eyes convenience, right? $2.75. So how does it work, right? So I'm buying a call option at 50 strike price that will expire on the 28th of October, and this will cost me $2.75, right? So the premium that we call it in the options world is $2.75. The objective is that at the end of the day, the trade should make me more than $2.75 in order for this to be a profitable trade. So let's see what's going to happen when Elon Musk closes this trade at $54. So if Elon Musk closes this trade at $54 by 28th of October, right? In theory, the 50 call option will be worth $4. Why? Because I'm allowed to buy it at $50 and the price has gone up to $54. So therefore, the profit in this case will be $1.25, and that will bring in an ROI of 45%. Now, before you go crazy on the option, just take note, of course, there are some downsides here, right? So what are the downsides? Number one, if Elon Musk dragged this case beyond the 28th of October or somehow managed to get out of the deal, remember the call option will expire on the 28th of October. So if this happened, the option will actually be worthless. Of course, another way to profit from this trade is just to simply buy the shares of Twitter, right? Right now, since the share of Twitter is selling about $50, you can buy at $50 and just wait for Elon Musk to close this deal eventually at $54. Now, and you will earn the difference of $4, in fact, $4.20. But take note, this for me is really just a bet. It is not going to make up a huge portion of my portfolio. So please do your own due diligence. This is not an investment advice. I'm just sharing with you how you can potentially use options to trade around such a special situation. Please don't go crazy on it. Alright, so I'll wait for the trade to go through and I'll do an update video later on to share with you how it does. And if you like the content over here, do like and subscribe, and I'll see you guys next time. Bye bye.